All right, welcome back to another monthly market update for the Columbus, Ohio real estate market. I'm Ryan Deeter with Key Realty, of course, and in today's video, we're going to do a deep dive into the March 2023 numbers to see where we're at in the spring market here for Columbus, Ohio. All right, here is the March 2023 Columbus Realtors data they put out for us. We're obviously here in April now, but it's always a month behind. And the first things I always glance at, of course, are the average price points, median price point and average price per square foot. Those three numbers are kind of the ones that I'm kind of tracking at first. Quick glance to say, where's the market going? Are we accelerating quickly? Are things slowed down? And as you can see here, it's actually somewhat a modest growth overall. And again, this is the whole area, entire MLS of an area, Columbus region, really, that's tracking this. So we're going to dive into a little bit more detail on that later, but just wanted to show that, hey, we have slowed down in a sense of price growth on all three data points there, which kind of shows that, okay, yeah, we have slowed down, and we go jump over here year to year. That obviously slows down to under 5 for the year on average, just over 6 on median, and under 5 for average price per square. Historically, 5% is around the historical range throughout the country. So obviously this is under, we have definitely had a slowdown in a sense of appreciation growth, but that does not mean that it's not, it doesn't mean it's a buyer's market by any means, because we're still seeing, kind of things happen out there that are showing very, very competitive market in this area, or in this market right now. We're in the middle of spring, and I've seen some crazy offers. I've seen some crazy amount of offers with crazy terms and conditions still, with appraisal gaps and well over asking. In fact, I just saw a house in Clintonville that was listed for about $1.1 million, a nice large home, and it sold for about $250,000 more than what it was listed at. So people are still willing to make well over asking price offers, and with a lot of things thrown in as well. We're seeing kind of the tale of two markets. One's that, hey, here's a house that's perfect, doesn't need anything done to it, and it's priced well. It's actually priced maybe a little bit under, quote unquote, what it would be valued on paper. And so buyers are willing to press, still make offers that are aggressive and really push the price up. But the houses that are sitting, are the ones that need work and are very aggressive on the price point. Buyers are having a harder time not only purchasing a property with the higher interest rates and the higher prices put together, they're even having a harder time when it comes to buying a house that needs work, and a lot of work. And so things that need full cosmetic updates, full bathroom, full kitchens, and of course, all the other things just to make it a livable, is a lot more difficult to sell right now. And so it's really, positioning a home takes a lot more effort right now than it had the last few years, as we just saw, you put on the market and eventually sell. The other things I'm following as well, I want to kind of jump into, are the days on market. Of course, this kind of shows us how competitive things are. We have gone down for the days on market, or gone up, sorry, quite a bit. But what we're seeing really is kind of that story I'm telling you about. Houses that, there's a lot of houses that are sitting for a long time. There's houses that aren't sitting at all. They're still selling very quickly over the weekend when they're listed. And average price, received compared to, list price, we're still around 98.8. So, you're not really getting a huge discount on homes still, not a massive discount. It's the homes that are, again, I bring that up of the tale of two kind of markets right now when it comes to homes that are completely finished and ready to move in versus homes that need work. And this is actually pretty normal, pretty standard in a more balanced market. And so we're starting to see signs of a more balanced market this time of year, especially this time of year when things tend to kind of accelerate really quick. We see that it's not quite accelerating as quick as a whole. Let's jump down here, because this is the spring market last year. We saw one of the craziest spring markets last year in 2022, just one of the fastest accelerations, because of course this is where the Federal Reserve was talking about raising interest rates when they were in the threes, really at the beginning of the year, creeping into the fours. All of a sudden it went from 3 to 7 within a very short period of time, a handful of months, that caused people to really panic buy and really buy stuff as soon as possible, which I don't disagree with them. We saw a little bit of correction over the fall, and we saw last month, we actually saw a pretty good spike. We saw, let's jump into last month, we saw about 6% appreciation growth when it comes to average, 12% median. And so, we really saw some pretty healthy growth last month, February to February. I was thinking, okay, that's this. We had a kind of an early spring market kind of start here. I'm thinking, okay, here we go. We're getting ready to go on a ride where it's going to continue to continue to be in the tens maybe this next few months. But what I'm seeing is not that. So I was kind of surprised to see only 3%. But what I'm seeing is that it's very, very, again, it's just very dependent on condition, I think first and foremost, and location next. Condition, location are always going to be a huge factor of what's going on. And I'm actually going to jump into something here that's, you can actually break down. The Columbus Realtors Association puts this numbers out, and you can break this down based on county, based on school district, based on, just community. So there's a lot of ways you can break this down. And I want to bring this up because what we can see is the numbers are really all over the place when it comes to this. You can see there's negatives, positives, negatives, so, huge swings. We see a 15, here, this is count, breaking it down by county. Champaign County had 15% appreciation, where Clark County had almost -5, 60% in Hocking. Not surprised by that, as a lot of people are buying properties up in Hocking Hills and seeing some huge things going on there in growth. But a lot of times it can be, when there's only 30 closed sales, like in Hocking Hills, 2 or 3 homes that really, sell for a really high point can really sway that number too. So we see here, this is a good example. Madison County had 22% and Morrow County had negative, 20%. So we're just seeing such swings in this. And this is why it's important to, really focus on the local data and not just, look at the, big picture and assume your house is going to sell just like that, kind of going from big to small. And this is why I think a professional is more important than ever on how to position a home, how to price a home right now, depending on your situation. Going into the school districts and just areas. So it breaks it down kind of by area and school district here. And you can see, I'm not going to dwell on this too much, but you can see a lot of swings as well. We see, here we see a 10% increase and a 10% decrease right next to each other. And, that's what Dublin and then, Gahanna's Jefferson School District. So, not to say that those areas are, falling off the map, the ones that are negative. It's just, it may be 1 or 2 properties that really are bringing those numbers down. So I do like to look at the averages, but at the same time, this is important to see, okay, what's happening in your area. I don't talk about this too much. And then, because if we go back another year, looking at this same month a year ago, we're going to see mostly positives, a couple negatives thrown in there, but mostly positives as you scroll down here. You can see again, a handful of negatives, but overall it's up and to the right, kind of as a whole. It has been easy to just assume that your house is going to sell for more than what it has the last few years. Not quite the case anymore. You have to really position your house well now and say, okay, what's worth updating, what's not. You can't just expect your house to sell more than the person down the street just because of time. You now have to understand the nuance of the market, nuance of your house, nuance of your neighborhood, and things like that. So there's a lot of important things going on here. The other thing I want to point out is, again, the days on markets, jumped up, 88%, which is a huge number, but when it's only 18 to 34, it's a lot, but it's still kind of what's happening is those houses that aren't selling quick are falling through the cracks and are staying in the market for a long time, creating not only more days on market, creating more inventory as a whole on the market. But what I'm seeing still is less in contracts. And this is what I'm really following for you buyers out there and even sellers that want to, sell their house top dollar, is that the new listings are still way down. We're still 20% less than we have been. And we really haven't had a ton. 2022 was not a record year by any means of new listings. And so when you already have a low inventory and you make it even lower, it's going to keep the supply down, and there's still enough demand to get top dollar for your house and get more money if you do it right. And so that's what I'm really focused on. This is kind of what stuck out to me with this market report. We're seeing a slowdown. As you see here, we saw a spike last month, and you start curve off already. Typically, we don't see that this time of year. Typically, this is when we start seeing things really spike up as spring starts to hit, things start to bloom, and it's easier to, it's just easier to see what the value of a house and the value of landscaping and all that stuff. Thanks again for tuning in. Hopefully you found this information helpful. If so, please subscribe. And if you have any questions pertaining to your individual situation, always happy to have those conversations for you. Please feel free to reach out via text, email, or a phone call if you'd like. Have a great day.